The question is, are mortgage rates going to drop after the Federal Reserve reduces the Fed funds rate at the next FOMC meeting? The next meeting is going to be on September 17th, and they are expected to decrease the Fed funds rates by 50 basis points. Some analysts are predicting 50 basis points. The reason is because the Federal Reserve is mandated by Congress they have two tasks that Congress gave them. One of them is to stabilize pricing, in other words, keep inflation low. Their target is 2%. Right now it's at 2.7%. And then the other mandate that they have is to have full employment. Well, what happened is that the jobs report came out on Friday, and it was dismal. There were hardly any jobs created, and actually the unemployment rate increased too. So they're expecting the Federal Reserve to act upon that and to maintain full employment, decrease the Fed funds rate. Now, whether or not that affects the mortgage rates, we still have to find out, but typically what happens is the markets have already factored in a decrease in the Fed funds rates. For instance, before the announcement of the jobs report, the mortgage rates were hovering around 6.7%. After that report came out, they dropped immediately. They dropped to 6.5%. So we're not really quite sure what's going to happen. And sometimes, even when the Federal Reserve meets and they decrease the Fed funds rate, the mortgage rates will actually climb, which happens, which happened a few times. So don't expect that much of the mortgage rates to decrease after, after mid-September. It's going to be, pretty much the way that it is. So anyway, the best thing to do is to, on a need basis, if you really need to move or really need to, sell your house or buy your house, factor in other considerations, not worrying about what's going on in the short term in the economy and what's going on. Just factor in what your own needs are, and that's the best advice that I can give. So anyway, thanks so much for watching,